Good afternoon, everyone. Today I'm chatting with Jeffrey Christian from the CPM Group. In today's interview, we discuss Donald Trump and his tariffs and what we should be looking at if we are considering trying to model out the different economic scenarios that these tariffs might bring. We also get into the precious metals markets and what they might look like in 2025, as well as some of the sensational headlines out there that you probably want to try to avoid if you're trying to manage your own money. All right, everybody, enjoy the interview. Jeffrey, thanks for joining us.
It's always a pleasure. How you doing, Stephen?
So, since the last time we spoke, if I recall correctly, we were talking about copper, and Robert Friedland was running around telling everybody that we were down to days left of copper, and you came and you threw cold water on that and told us, "Calm down, everybody. Copper's not going to the moon. There's actually a lot of copper on the
Yeah.
sidelines that nobody even talks about." So, I first off have to say congratulations on getting that call right.
Well, the copper price did rise.
It did.
But yeah, it didn't skyrocket. Yeah.
Yeah, well, the rhetoric on social media and the zero hedges of the world was the copper was about to explode, and
Right.
it didn't quite work out like that. It's done well, but
I find it intellectually and ethically offensive the extent to which gibberish is allowed to circulate about commodities, all commodities. Yeah. I mean, in the fixed income and securities markets, if you're going to be commenting on a stock or a bond or a bank, you can express opinions, but you have to have evidence that you could say this is a legitimate opinion. But in the commodities market, anybody can say anything, and there's no regulation that says, oh, well, you shouldn't be making such spurious comments, you know? And the market doesn't regulate it either. I mean, you have a guy who's telling you that gold's going to 10,000 for 20 years, and he's got 100,000 people listening to his every word. The market doesn't penalize people for being wrong.
and you're somebody that I find I see your name mentioned on message boards and other places
Yeah.
where you're kind of a polarizing figure, we'll put it that way. There's people who they love Jeffrey Christian, and there's people who disagree with you. But I'll say this: everybody seems to respect you. There's not this like some of the other people that are considered more like the types that people roll their eyes at.
Yeah.
And I think that's because social media has trained so many of us that we have to make these sensationalist calls on things where it's like if I go on a YouTube show and I don't say that silver is going to see $100 within the next year, then nobody's going to watch
Right.
it.
Even before the internet, when back in the 80s, when we were still part of Goldman Sachs prior to 1986, we saw this phenomenon in the stock market and in other financial markets. And let's say that you're sitting there and the economy says it's in good shape and the stock market ought to rise. So everybody looks at the stock market. And the way CPM Group works is we look at the fundamentals, we look at the economic and political environment, and we say, okay, we think that the gold price is going to rise. Then we look at the gold market and the gold price history, and we say, what's a reasonable pace and level? What are the levers? At what price does supply turn off and jewelry demand pick up? At what price do the supply pick up and jewelry demand falls off? And we look at the levers and we come up with what we consider to be a realistic pace for the increase. Everybody does that, or everybody used to do that in the stock market. And so let's say that you had stock market, let's say back then, the Dow was at 5,000, and everybody thinks, this thing could go up 10% to 5,500 over the next 12 months. So every bank and brokerage house is saying, we think that the Dow could go up 10% this year. Now, if you're in that group, you don't get any attention. So you got to say, no, I think it's going up 15%. And then somebody else says, I need the attention. I need the headline. So I'm going to say, I think it can go up 25%. And the next thing you know, you have some guy saying, I think the Dow could double in the next 4 months. And he's only doing that because he needs the attention. Yeah.
So let's talk about the current state of things because since Donald Trump has been inaugurated, there's been quite a bit of disruptive talk, I guess might be one way of putting it. I there's talk about these tariffs, which here in Canada is a really, really big theme. I get the sense from talking to my American friends that it's not as much of a headline grabber in the US as it is here in Canada, where I mean you see it with the hockey. I think a third of the households in Canada were turned on to watch Canada play USA in hockey, which the excitement had died down in recent years, but it kinda came back over that. I don't know if you know what I'm
Yeah.
referring to, but the Four Nations game,
Yeah, I do.
and,
I
so
well,
I I'm I'm curious though, do you think that this tariff talk is a real thing, or do you think it's just a negotiation tactic?
I think it's both. It's a combination of both, you know. Even before Donald Trump's election, over the last several years, over the last 10, 12 years, really, we have seen on a global basis a breakdown in international cooperation, an increase in tariffs, a growing hostility toward globalization, the rise of nationalism around the world. And we've seen that occurring. And I think Trump is doing two things. A, he's playing to that, and that fits in with his political temperament, which is fascist, to as a nutshell. It fits in with his thing, and he's feeding into that on a real level. But then he also has, and he's even admitted, he sat there and he said, "I just throw these numbers out like 25% tariff." When he said, I'm going to put a 25% tariff on Canadian, everything from Canada and everything from Mexico." A reporter asked him about that, and he said, into the camera, "I just throw these numbers out to scare people and get them to the table." So I think there's some of that, which is really like it's a clumsy negotiating tactic. It's like, it's a very clumsy negotiating tactic that most people ought not to fall prey to. But there's also an underlying global trend toward tariffs and resource nationalism and political and economic nationalism. And he's playing into that as well.
But do you think it works though? I mean, when we're talking about putting tariffs on, let's just say copper, for example, and
Yeah.
you're going to now put a 25% tariff on copper, which is supposed to stir up domestic production of copper.
Yeah.
But it's not like we're talking about building
Yeah.
widgets. We're like you were talking about mines that have much lower grade. So it's like the impact of actually getting some of these mines into production where you're going to be mining copper that's like 0.2% now, I guess. It's going to be a lot more than 25% to produce that domestically, I would assume. Does it even
Terror, terror, Tariffs are economically destructive. Yeah. I mean, you can go back to Smoot Hawley in 1929, but you don't have to do that. Tariffs are economically destructive and they lead to inefficient use of resources, both natural resources and capital resources and labor resources. And so what you would do and what you will see with the increase of tariffs and then retaliatory tariffs is a misallocation of capital and labor that will cost everyone economic wealth. It's not a good thing.
what do you think about what it will do for the economy? Like when you think about the mechanics, do you think that it's going to result in like we're obviously going to see a gap built in GDP, I would assume. There's going to be an inflationary component because suddenly things are more expensive. Uh, Now you'd assume that you'd be raising rates to combat inflation, but at the same time, you also assume that there's going to be a whole bunch of money printing in order to try to fill that GDP gap and try to help everybody through this recessionary period. It's kind of hard to wrap your head around it actually happening, isn't it?
We've been struggling for the last 2 or 3 months. Well, not struggling, but we've been working very hard trying to suss out what the Trump administration might mean for the economy. And part of it is that, you had this, in the United States, you have this interim period between the election and the inauguration of like almost 3 months. So you have a large period of time where there's all this rhetoric and you don't know what it is. Since January 20th, we've actually begun to see what the Trump administration is doing, and that gives you better clarity. It's very easy to conclude very definitively that the tariffs will be inflationary, and it's very easy to conclude definitively that the tariffs will reduce overall growth and possibly tip us into a recession throughout the industrialized world. When you get into the monetary policy response and the fiscal policy response, that's where you have a lot of uncertainty still. You would think, since the Great Depression, governments have responded to recessionary conditions by issuing money, and being fiscally stimulus, having jobs programs and other payments out there. You would think that that would be a result of this recessionary pressure, but the Trump people are trying to do something differently. And it's very interesting because, part of their strategy, the flood the zone strategy, is to lie through their teeth. So you see, like on Friday, Musk and Trump were both saying that they cut $55 billion from federal spending, but their own board, their own tote board, said it was 7 billion. And if you tried to suss out where that 7 billion came from, you could not find it. And the reality is that if you look at most of these agencies, if you're going to require somebody who's working remotely, and they have moved away from their old office place, which has been the situation with a lot of people. A lot of people, when they said, I don't need to live in the Washington, D.C. area, I'm going to go live back home where it's a lot cheaper. The regulations are that if you require people to move back, you have to pay their relocation costs. So the reality is that Trump's budget cutting may cause an increase in deficit spending. Now you have two issues. You have the fiscal policy, and what's the result? What's the fiscal policy going to be if you have high inflation and recessionary economic conditions? And then you have the other one, which is what's the monetary policy going to be? And right now the Fed is saying, look, we have to worry about inflation more than recession. I don't know if they'll continue to say that, because it's too early to say how much recessionary pressure will come from various policies that are going to be on the fiscal side with, the administration and the Congress. So it's hard to say what exactly will happen from a monetary perspective as well as a fiscal perspective. But what you can say is that tariffs in and of themselves are inflationary, and they reduce economic growth and wealth,
So
all of which is good for gold and silver.
that was going to be my next question: is how does this play in? Obviously, we're having a great year in the precious metal markets. It looks like gold's certainly going to see $3,000 this year. Knock on wood, but it looks like we're heading in that direction. Silver has done okay. It hasn't. I don't think it's really kept up pace. Perhaps it has, but we usually see silver a little bit more torquey when gold runs. That hasn't happened. You're generally bullish almost in all scenarios here with the Trump's administration for precious metals.
We run a bunch of economic scenarios, and then we usually use three of them in our long-term 10-year projections. A main scenario, which right now has about a 65-70% chance of probability assigned to it, and then a high and a low scenarios, which have the other 30-35% distributed between them. And our expectations are primarily that gold and silver prices will continue to rise through 2025, possibly into 2026, as a result of the economic and political environment that we expect to be reality over the next 2 years.
So when you're modeling out that main scenario, I'm curious what those economic conditions are. My guess would be that that the tariffs come in. We see a whole bunch of economic or fiscal stimulus and probably monetary stimulus, and then ultimately the tariffs get taken away within 12 months. Would that be the likely scenario?
We're not sure about the tariffs disappearing within 12 months. What we do see, and it's not just the tariffs, you see other things that they're talking about doing. If you cut $1 trillion out of government spending, you're cutting about 4 or 5% out of US GDP. And you're increasing unemployment, which means that you'll have increased unemployment payments unless you slash those two. You know, so you're increasing the budget deficit, you're increasing treasury borrowing, you're decreasing economic activity. So it's not just the tariffs that are problematic on the economy. Our view is that we will see a recession possibly by the third quarter, fourth quarter of this year, that it could be a relatively deep recession, much deeper than, say, the ones in 1991 and 2001. Uh, Probably not as deep as the one in 2007 through 2009 or as prolonged. But we think that you will see a recession. When you see a recession, you often see the gold and silver prices come off. Discretionary income, discretionary purchases of jewelry fall. The prices typically will rise into a recession, and you'll see profit taking from investors. In the case of the gold market, you have central bank buying, and central banks are value investors. They already have bought a lot less gold last year than they had bought in 2023, reflecting the fact that the gold price went from $2,000 to $2,600 over year over year. So you can see lower demand for gold and silver and increased supply from inventory sales, if you will, in once you get into that recession. So our expectation is that we see as a recession. It could be a nasty one, could be global, spread throughout the industrialized world, and maybe even spilling in on the global total, while you see China, India, and other countries that are big exporters to Europe, the United States, and Japan suffering as a consequence of that recession. And that gold and silver prices rise into that recession, and then they may come off depending on what else is going on. You also have the political war. You have Russia and Ukraine, which is now becoming Russia, Ukraine, the United States, and Europe. You have four actors that are quite distinct, that may be going their separate ways. And then you have Taiwan still out there, and you have other issues. So there are a lot of factors that are probably negative for the economy, negative for society, negative politically, positive for gold and silver.
Historically, when we talk about recessions, and I swear I heard I think it was George Gammon on YouTube say this once, but and I was never able to actually go and find the study that he talked about, but he did a video on it that the best time to buy gold is about 60 days before a recession gets announced.
Yeah, it's not quite that easy, but yeah, the best time for gold is the late stages of an economic expansion because people are still wealthy, but they're increased. Usually there are signs of recessionary pressures coming. So people are nervous. They're looking at the stock market. They're saying, I'm very wealthy. The stock market's done very well during the expansion, but it's looking top heavy. And I got these guys saying that it could fall 10 or 20%. And other people are talking it's going to fall 50 or 80%. So I'm nervous about my wealth. How do I protect my wealth? And I still have income. So I cut back on my vacations and I buy gold, and so gold and silver have tended to do best in the late stages of an expansion. Sometimes 2007 to 2009, gold prices rise into the recession, then they fall sharply, and then they rise again, and they continue to rise after the recession's over. I mean, gold rose through the late stages of that recession in 2009, and gold and silver rose 2010, 2011, as we were in the early stages of a recovery. because we had the international debt crisis, sovereign debt crisis in Europe, the Greek debt crisis, and the downgrading of U.S. Treasury credit ratings. So you had other factors than recession and economic conditions and inflation causing investors to say, I need insurance, I need protection. There's an economic storm here. Not sure how it's going to shake out. Give me some gold and silver.
I have to ask you just because you're a guy who usually has a very, as we talked about earlier, a very objective, thoughtful approach to things. But the talk about auditing Fort Knox, yeah, you think that there's any reason to have any excitement there as a gold bull, or do you think that that's just sort of an urban legend that gets spread it around that there's or spread around
I
there's not enough gold there?
I happen to have this thing. This is from actually Ron Paul. This is not a U.S. Treasury report. This is a the results of Ron Paul's hearing in 2011 about the auditing of gold in Fort Knox. And the reality is that there are two things that happen. And let me preface this. Trump and Musk talking about the gold in Fort Knox is just part of their scam to scare people and to create suspicion and anger toward the government. The reality is that there is an independent audit by, I believe, KPMG every year. And there was a deep dive audit and assay. I think it went from 2000 to 2008. It cost millions of dollars because think about 261 million divided by 400 ounce bars. How many bars is that? We could do the math. You had more than probably more than 1,800 bars sampled and assayed by an independent lab, right? Not by the Treasury. And you had every bar weighed, inspected, and checked the serial number against the bar list that the Treasury has as to where the gold is. So you had an independent assay, you had a bar by bar independent audit, 2000 to 2008. And when Ron Paul had this hearing in 2011, he started and we circulate, it's on YouTube. You can see his introductory comments where he says, I did not know that the Treasury audits its gold every year and that there was this deep dive, and the Treasury gave him the stack. And it's in here in Ron Paul's study. You can see 62 pages of assays of more than 1,000 bars, and you can see something like 200 pages of bar lists checked off against the list. So the bottom line is that an assay has been done recently, and audits are done every year. And for anyone, and it could be some gold promoter on the internet, or it could be Ron Paul, to say that the gold's not there and no one's seen it since 1945, et cetera, is just total bullshit. Excuse my language. It's a lie.
But that sells subscriptions and gets people to sign up on Twitter for
Yeah.
those who are telling us that that's not there, and of course they'll kind of just back out or head out the back door once it gets acknowledged that it's not actually there, and that's how our world works today.
The first time I spoke at the old Silver Summit in Coeur d'Alene, Idaho, like around 2005 or so. And the first question that was asked to me after my speech was, I don't know what to believe about you. Everything you say is diametrically opposed to what everybody else believes. And are you a government agent sent here to confuse us? And my answer was, you're wrong. Because everything I say is what you don't believe, and you are a minority in the precious metals market. If you look at who invests in gold and silver in North America, it is 90% of them are college educated, upper income, professional, 40 to 65 years old, right? And 10% are the guns and bunker conspiracy people. For every Now, when you look at the promoters who mismarket gold and silver to those conspiracy guys based on fear and suspicion and anger, you know, for every person that they convince to buy gold and silver, they're turning off 9 would-be buyers who say, oh my God, I want to buy gold and silver. I think it makes sense to buy gold and silver. But when I try to research it, I just hear this shit. Excuse my language, but that's what it is. It's mental excrement. And they're turning off those people. You would sell a lot more precious metals if the precious metals markets had the kinds of regulations that stocks and bonds have, where only people who can say, yeah, no, here's some real evidence, right? If you required every Andy Schechtman to say, oh, there's no gold in Fort Knox, to provide some shred of evidence that that's true, they wouldn't say it in public.
It's it's phenomenal too, because I've interviewed some of these guys before that we've had on who, they talk about how the market's manipulated, and you start to ask them questions about trying to explain the market mechanics and explain sort of what's happened and why it's manipulated, and you start to realize that, like, they actually there's no logical reasoning there. They just kind of make the conclusion and then just say a bunch of noise. Uh, that it's like,
Yeah.
okay.
Bill Murphy said, don't debate Jeff Christian. He brings a lot of facts and information to the debate. Now, if you look at it, every market, I mean, you can go down to Hunts Point in the Bronx, and the banana market is played with by banana dealers, right? They'll say, somebody will say, how much for your bananas? And I say, but you look like you don't really know what the banana market is. I'm going to charge you 25 cents a banana. There are people in the precious metals market who will try to game the prices. If you look at the court cases, Barclays was a big one. It was like several millions of dollars, if not billions of dollars, that Barclay was fined because one of its traders was trying to manipulate the gold price on options expiration time. One day, one option expiration, and a guy was trying to manipulate the price so that his client's options would expire worthless and he would get to keep the premium. He was fined. I think he went to jail. Barclays was fined an enormous amount of money for non-supervision, not for manipulating the market, but for not supervising this guy. And in the investigation, the FSA, the British regulators, found that the trader across the desk from this guy didn't know he was doing it. Right? You look at JP Morgan, a couple guys, I think a guy went to jail. There are various other people who were fined and who were prohibited from being in the market anymore. JP Morgan and Citibank, I think, was another, and Deutsche Bank were all fined enormous amounts of money and put under Fed supervision for several years for non-supervision, for letting these guys do that. So having been in that place, having worked on Wall Street for 40 years plus, these guys see bad behavior and they say, oh, it's a conspiracy. But in reality, it's oftentimes one or maybe two guys. I mean, the JP Morgan case, one of the things that the court found was there were 2 or 3 people who were manipulating the price. And they didn't even talk with each other. Yeah. Other than to say, hey, do you ever do that? Yeah, I do. But they didn't coordinate their trades. So there was no conspiracy at any given time to manipulate the price at that time. There were 3 people who knew they could do that and did that, but they were acting as independent scumbuckets.
So in other words, if the price of silver and gold go up, it's going to simply put because there's going to be more buyers than sellers.
Exactly. Yeah. I mean, going back to the manipulation. Nah, it's a bad analogy. I won't say it. I won't, it is what it is. But yes, gold prices rise when there are people wanting to buy more gold than there are wanting to sell it. And gold prices fall when there are more people wanting to sell it than there are already buyers. And there's something to pay attention to is that the market makers, the bullion dealers, the banks, the trading companies that are involved in that, they see the market and understand it better than a lot of other people who are private investors who just see the price and say, oh, the price is rising, I want to buy it. And those traders and bankers that are watching this market 90 hours a week, yeah, that's my average weekday is my average week is 90 hours of work a week. Those people who are watching the market 90 hours a week have a much better idea of why the price is rising, how far it might rise, and when it might stop and when it might fall.
So have you guys come out with any targets for precious metals? Is that something you guys do?
Yeah. Yeah. We have we have ultra short targets. Like we have one right now. We issued it last Thursday, I think, and it was good through this Friday. So ultra short term, where we were saying gold right now, as we're talking, is about $2,961 on Monday, the 24th of February. Last week it was about $2,935, and we said we thought gold would probably touch 2,990 or $3,000 this week. That's an ultra. Then we have the next month where we have $3,000 and then it comes off some. And then we have the next 3 months, the next 2 years, and the next 10 years. So we project all of these commodities that we follow. It's not just gold and silver, it's platinum group metals, it's specialty metals, it's copper. We project all of these things from an ultra short term view for those clients that want that to 10 years and even longer. I mean, we take our platinum projections, platinum group metals, we take our projections out to 2050 right now. So that's 25 years.
Can I ask where you guys think it's gonna end up in 2025?
End up or over the course of the year?
What do you think's the high that we might touch?
For gold?
Yeah.
For gold, I would not be surprised to see, well, our published projections are that we wouldn't be surprised to see the price at $3,050 within the next 3 months.
Okay.
And furthermore, we say if you look at the seasonality, January through April is the period of strength in gold prices. So probably our view is between now and April, we might see $3,050.
Okay.
Longer term, we wouldn't be surprised to see the price on an intraday basis, $3,100, maybe a little bit higher than that. But we are expecting at some point one of those speculative blow-offs like we saw in 2011, 2013, and in 1980.
And what do you think of that looks like? Like that's like one of those things where we just sort of see a bunch of euphoria and we'll say the FOMO jumps in and it kind of overshoots and then works its way back down kind of thing.
Well, if you look, gold prices went from $260 in 2001, 2002 to $1,900 in 2011. They fell down to 1150. So they gave up about half of that move over a 3 to 5 year period. So we've gone from 1300 in 2019. 2019, the price was $1,300, and now we're at $3,000. I would not be surprised to see the price fall back to 2,000 or even 1,800. I don't see it going back to 12 or 1,300 the way it did from 2015 through it was actually 2013 through 2019. The price got down to like $1,200. We don't see that. We do see the potential that the price could come off. One of the things that changing in our long-term projections right now is looking at the prospect that the period of economic and political problems may be longer and worse than we have been projecting, and that could keep the gold and silver prices higher longer and keep them from falling as far as they otherwise might on a long-term basis.
So let's just say that I'm your old pal. I'm a portfolio manager, and I sit down with you. Are you telling me I should maybe have some cash ready for this recession and the potential pullback?
Yeah, in 2005, we said, hey, we think that this bubble, which was the real estate bubble, the economic bubble, and the collateralized mortgage obligations bubble, we were saying we think that this credit bubble is going to burst. And when you think that's going to happen, you want to do several things. You want to have a lot of cash. You want to get rid of the dogs in your portfolio. You want to have the best assets that you can. So a company, if you have equities, you want a company that's been around for decades, that's been a proven profit source of profits. You don't want a company that's came along 3 years ago and is worth $5 trillion now because it doesn't even have a product. You want to get rid of the dogs, you want to have cash, you want to have gold, you want to have silver, and you want to get rid of debt. And you want to have cash because A, you want to survive, B, there will be a liquidity crisis, and C, when the bubble bursts, all assets will fall in value sharply initially, and you want to have cash to buy them.
And that's the period that your 65% economic scenario is probably moving towards.
Yes.
Well, Jeffrey, thanks very much for hopping on here. We went quite a bit longer than we normally do. We normally only do about 20 minutes. We've been 37 today, so I appreciate
All
that
right.
you were generous with your time. Always learn a lot when you hop on here. And for our audience who wants more of your commentary, where can they go to?
Well, our website's cpmgroup.com, and there's a lot of free reads and free videos there. You can also read about some of our publications that we sell. We have an annual gold yearbook, silver yearbook, and platinum group yearbooks that are like $160 each. They're really the definitive works on these markets. We'll be releasing our gold yearbook for 2025 in March, our silver yearbook in May, and our platinum yearbook in July. And people can pre-order those. They come as an ebook, so you get the book on the day that we release it. And the last page says, if you want a printed version, you take this PDF to the copy shop, and these are the print specs to have it printed and bound. And it costs like $20 to have a book bound at a quick shop. So we have that. So it's cpmgroup.com and then info@cpmgroup.com. If you want to write us a note and saying, I'd like to learn more about how you guys can help me navigate the minefield that is precious metals investment rhetoric.
All right, well, Jeffrey, thanks very much for hopping on here. It's always a pleasure when we do this, and hopefully I'll get to see you at PDAC.
All right. Yeah, I'll be there, and I'll buy you a drink.
All right, everybody, thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.